please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Lehman Brothers filed for bankruptcy sometime during the day, I think on September 16 during the day in New York, which was nighttime for us in Mumbai. So I recall Shamla, who was deputy governor, as you said, at that time, waking me up around 2 o'clock and telling me that Lehman Brothers had collapsed and that there might be some instability in the advanced economy markets and that we must be prepared. So, you know, it's not as if we were completely unaware of some pressure building up in the financial system. If you throw your mind back to that period, you would find that in the week to 10 days before the crisis, there were a number of storied institutions falling one by one, starting with Fannie and Freddie. Then Countrywide went down. AIG came to the brink of a collapse, and Merrill Lynch vanished. Several big banks in the U.S. Were closed down. So they were isolated instances in the week to 10 days leading to Lehman collapse. But Lehman event was a big bang event. And the Reserve Bank, the experienced staff there, including Shamla and other deputy governors, read the situation very well, very correctly, that this will have an impact much more than the earlier isolated incidents, and that we must be prepared.
You're right, of course, that you were, of course, before September 5th, 2008, the finance secretary, and therefore, you know, all sides were kind of somewhat prepared. How did you look, I mean, how was the Reserve Bank prepared? Did you get a sense that, you know, they were preparing for it for months or something?
No, I didn't get that sense. You know, if there was one central bank in the world that was actually prepared for the crisis, it was the Reserve Bank of India, because as we now know, it's well known that the RBI under Governor Reddy had instituted macroprudential measures. In fact, macroprudential became a fashionable term after the crisis, but much before it became fashionable, the Reserve Bank had tightened the regulation of the financial sector, both banks and non-banks. So if there's one central bank that was prepared, it was the Reserve Bank of India. But even then, I would not say that the Reserve Bank saw a crisis of this magnitude and this proportion unleashing on us all of a sudden. And that night was actually quite a bit of hectic activity for all of us in the Reserve Bank.
Okay.
The night after Lehman Brothers collapsed. If you recall, at that very night, we had done two things. The first thing was to ring-fence the two subsidiaries of Lehman Brothers in India. I think Lehman Brothers had a non-bank finance company and a primary dealership. The first thing we did was to issue a statement ring-fencing them so that no money would go out from them. The second thing we did was to issue a statement that the Reserve Bank is keeping a close tab on the developments and is prepared to take whatever action is necessary. It was a very bland statement. In fact, you know, because I was new to central banking, I was wondering about the necessity of issuing a very bland statement like that. But in the event, you know, the experience, the cumulative experience in the Reserve Bank guided us into doing the right thing, which was to release a statement. And I think that went a long way in assuring financial markets the first thing in the morning.
Well, that's former RBI Governor D. Subbarao on how the RBI back here in India grappled with the unfolding crisis. Equities across the world went into a meltdown, and Mumbai was no exception. The Sensex crashed over 1,000 points. Stock market movement mirrored 1929, said then the top economic advisor to the government, Montague Sikaluwale, at the Planning Commission. The UPA has been blamed for running up high fiscal deficits as it embarked on a spending spree post the 2008 crisis to lift the economy. Montague defended the immediate measures, but he was also candid enough to admit that the stimulus should have been withdrawn after a couple of years. This is a sentiment that's been echoed by the former Finance Minister P. Chidambaram as well, saying that the stimulus should have been withdrawn earlier. Take a look.
No, no, certainly not on the night of September the 15th. I mean, I actually remember that they filed for bankruptcy sometime in the morning of September the 15th. And I don't even remember the news breaking that dramatically that evening. It was the next morning, on September the 16th, that we saw it in the newspapers. Now, you know, at that point, I mean, it is not as if there was no sign that there were problems. I mean, we knew that the subprime crisis was building up. We had seen Bear Stearns being absorbed by another major bank a few months earlier. The difference here was the fourth largest investment bank in the United States went bankrupt. So that was clearly a bit of a shock. It's only in subsequent days when the extent of, A, the contagion, you know, these toxic assets were not just concentrated in the US banking system, they actually had spread over in the European system also. And secondly, the sudden lack of trust within the banking system, that nobody quite knew whose balance sheet was going to go next. I mean, after all, Merrill Lynch was bought over, so we knew that something big is happening.
Yes.
But, you know, the notion that this might be the beginning of the Great Recession, that, I think, came a little bit later, essentially when the stock market looked as if it was crashing. I mean, I remember briefing Dr. Manmohan saying that in the couple of weeks after the Lehman Brothers crisis, the movement of the stock index seemed to practically mirror, in proportional terms, what had happened in 1929. So then people got very worried indeed.
Okay. But Mr. Ahluwalia, you know, we've cut our rates all the way from, 9% when Dr. Reddy's term ended to about 3.25%. That, okay, was something I discussed with Dr. Subbarao. But fiscal policy, I remember so well at that time, that 2.6% fiscal deficit, which was budgeted for that year, ended at 3.3, and then the subsequent years it became 4% and went up to a peak of 4.8%. Now, as you look at it 10 years later, do you think that was an excess?
You know, the 2008-2009 increase in the deficit was a result of a fiscal stimulus that was injected into the system in December and February, okay? And given the delays that exist in our system, it took a long time before we could make out whether something was really working or not. And secondly, the government was heading for an election.
Yes.
So the Prime Minister, as you know, Mr. Chidambaram moved in November to become Home Minister. The Prime Minister took charge of the Finance Ministry, but in January he had a bypass surgery. So External Affairs Minister Pranab Mukherjee became acting finance minister, and he had to present an interim budget, okay? Now, by the way, this is an interesting thing, you know, a parliamentary convention says interim budget should not say anything more expenditure than in the last year, which is actually ridiculous because, you know, if inflation is going to be 8-9% at that time, that is a highly contractionary signal. So in fact, I had a discussion with him and I said, sir, I know the parliamentary tradition forces you to produce a budget which doesn't go beyond 2008-9, but you should actually say that we're going to need to do more in July if we come back. And of course, whichever government comes would have to do it. And he did signal that. Now, when the new government came in, a conscious decision was taken that we are going to have a higher fiscal deficit than was scheduled for the previous year.